All right. Today is Tuesday, October 5th. This is a recap for the stock market activities today. Folks, apologies for the absence last night. I was in social media jail for daring to apply some critical thinking and questioning our deal leaders' narrative. But our deal leaders at Big Tech, they have our best interest in mind. And they told me, you know what, kid? Do you want to make it in this business or what? Do you want to make money or what? And I said, yes. They said, okay, then you better get on with the program. Stop questioning things. Stop it with the critical thinking and what ifs, what about, how come. Forget about all of that. Just go on with the program and you'll be fine. And I thought about it for a little while. I was holding on to my rebellious nature. But then the big tech overlords, they turned up the heat big time. They locked my capsule and the chip in my brain started to malfunction. And of course, at that state, I could not hold being locked out of my capsule and I had to fall. And I told them, you know what? I'll do whatever you people want. No problem at all. Specifically because the weather was bad and I could not afford being locked out of my capsule. The weather in Southern California last night, it was utter chaos with lightning strikes all over the place. These were the good ones, the ones that land right on top of your head. Matter of fact, the man upstairs had great aim last night, scoring over and over and over and over again, hitting palm trees one after the other. So I folded and I said, you know what, please let me back in my capsule. That's all I want right now. And now I'm back. And I got a message for you folks. You gotta listen and obey your big tech overlords. They have your best interest in mind. With the exception, of course, of Mark Zuckerberg. He got some problems. We'll talk about him in a second, but you also have to stop questioning the Fed. Trust your leaders. They have your best interest in mind. Jerome Powell, all of what he wants is to create jobs for you bumps, to create common prosperity by making the rich richer. And we should trust his judgment, right? When it comes to the V mandates, we should always trust the deal leaders because they have our best interest in mind. And with that message out of the way, in focus tonight, we will talk about what else? The Facebook scandal, the whistleblower scandal, and the impacts on Facebook shares in the market overall. Then we'll talk about Warren versus Powell. And lastly, a revisit to the wall of worry. Over the weekend, we got the news from 60 Minutes that we have a Facebook whistleblower, and she dropped bombshells all over the place. And by bombshells, I mean shit that we already knew about, but we now have a confirmation of the sadistic, sinister practices going on over at Facebook. Among them, the fact that Facebook's algorithms suggest toxic content intentionally to users. In a nutshell, Facebook wants to instigate and sort of ignite this fire back and forth, toxic debates, toxic arguments between users, and of course the executives. After starting the fight, they sit down with a big bag of popcorn and they watch the show. But perhaps the most troubling revelation is a build-up on the news that we got a few weeks ago, that Instagram in particular is toxic and the algorithms intentionally promoting toxic content to teenagers and children. And of course, this is causing body image issues, depression, etc., etc.
Instagram can be damaging for many teenagers' mental health, most notably teenage girls. These are the internal findings from Instagram's own parent company, leaked exclusively to the Wall Street Journal, not seen by NBC News. The journal citing 3 years of the tech giant's internal studies, including one leaked PowerPoint slide from March 2020 that reads, 32% of teen girls said that when they felt bad about their bodies, Instagram made them feel worse. Another from 2019 reads, teens blame Instagram for increases in the rate of anxiety and depression. The Wall Street Journal's Jeff Horowitz writing 6% of American teen users who reported suicidal thoughts traced the desire to kill themselves to Instagram.
This could potentially have life-altering consequences.
The shocking findings are not surprising to 18-year-old Anastasia Vlasova. She says she developed an eating disorder when she was 13. Around the same time, she joined Instagram.
It's obviously extremely difficult when you open up your phone and you see this feed of endless amounts of perfect photos.
The latest reporting also showing Facebook publicly downplayed the ill effects of Instagram on multiple occasions.
The research that we've seen is that using social apps to connect with other people can have positive mental health benefits.
And of course, Facebook is in a hot seat right now. It is toxic waste to begin with. It is not just toxic to young girls, it is also toxic to young boys and young men. I cannot speak on behalf of women, but I can speak on behalf of men. Because what is Instagram really? It is a soft porn site. That's what it really is, in a nutshell. And therefore, it is toxic waste, it is toxic garbage, and people are better off without it. I go on my Instagram feed, for example, and all I see is silicone all over the place. TNA, right? Fake stuff all over the place. And of course, I know what you're going to say, but the algorithms are promoting stuff for you that you're already interested in, meaning stuff that you already follow, and stuff that you click on. And therefore, Maverick, you got a dirty mind, and Instagram is just following your dirty mind and suggesting more stuff. And I say, I don't even click on that garbage. Trust me, I don't follow any of that stuff on Instagram. I don't even look at it. Believe me, but they still shove it down my throat. And now we have young men, the youth, they got a problem because their expectations are wired differently these days. All of what they see is fake stuff on Instagram, stuff that is not real, probably photoshopped, and they set their expectations to that. And then they get into a real relationship with an actual woman. And all of a sudden, things don't work as expected, shall we say? Right, gents? The plumbing doesn't work. Right? The plumbing works when you're looking at Instagram, but magically the plumbing stops working when you have an actual human being laying next to you. Why? Because your brain is programmed, the wires, they're programmed differently now. You get your pleasures digitally. And therefore, we see problems with relationships, body image, confidence, etc., etc., etc. So once again, Facebook, Instagram, toxic garbage for both men and women. But the other side of this story is why Facebook? Why now? Why are we hearing all of this right now about Facebook? Because all of them are toxic, including Twitter, YouTube, and the rest. TikTok specifically is extremely toxic. Of course, I'm not denying the information, the validity of the information. It sounds detailed and truthful. We already know that. But the problem is, once again, why Facebook and why now? Of course, the whistleblower says she joined Facebook after one of her friends or relatives harmed herself due to conspiracy theories she got from Facebook. Really? I wasn't born yesterday, folks. And the buzzwords, the programmed testimony, it's all obvious here. We know what's going on. They're all bad, yet they're targeting and singling out Facebook for obvious reasons. Reasons that we already know. They blame Facebook for meddling into the E word, right? We can't even say that one. And we could have had a different president absent of Facebook's propaganda. Regardless of what you think about that, the reality is they're pushing for Facebook to be sterilized. What does that mean? It means Facebook evolving into becoming YouTube, for example. YouTube followed the rules. They criticized YouTube over and over and over and over again. And what has YouTube become now? Pretty much a DVR service for cable companies, cable news in particular. NBC, CBS, Fox, CNN, they shove it down your throat. You don't have another choice. Meanwhile, the algos don't promote independent creators, specifically creators who dare to challenge the narrative. Similar story with Twitter. Twitter has the check marks, approved sources, and you are not an approved source unless you come out of New York Times, Washington Post, etc., etc. And the goal here is for Facebook to promote news from verified and approved sources and have the algorithms promoting that kind of stuff and not news, articles, or discussions from non-approved, non-verified sources. The stock is down big, at least it was, over 5% yesterday. But on top of that, by the way, we got the outage, a massive outage. And we have a lot of theories of what happened there. I'm not going to go into it, but you can find these theories in other places. Suit yourself. But at the end of the day here, how would this piece of news impact Facebook as a company, as a stock, and the future of Mark Zuckerberg as a CEO? My hunch is this stock, this company, this CEO have been Teflon against all of the criticism and all of the problems they faced in the past. And the reason is Facebook as a company continues to deliver like no other company its size. The growth is massive. For example, when you look at the revenue growth for Facebook, double digits growth year over year over year. No other company this size deliver this kind of results. Double-digit growth in revenue year after year after year. Likewise, when we look at net income, massive growth consistently year over year. When it comes to EBITDA, similar story. growth year over year consistently, and money speaks the loudest. The company, the CEO, continue to deliver. The customer, the consumer, continues to use Facebook and Instagram. Small businesses across the country use Facebook, and therefore, while the allegations are extremely harmful to Facebook, I don't believe that they will change anything here. If anything, investors and traders will speak and they will continue to buy the dips on Facebook. It is a company that delivers growth like no other company. Love him or hate him, Zuckerberg continues to deliver for his investors. Until and unless this story changes, Zuckerberg is here to stay. We might have some changes here and there in Facebook as a platform regarding the algorithms, but at the end of the day, nothing will fundamentally change in Facebook. Investors love the stock, and they will continue to love the stock regardless of these allegations. This is the truth and the reality. And by the way, how come Twitter is not under scrutiny? How come YouTube is not under scrutiny? How come TikTok is not under scrutiny? How come Tesla is not under scrutiny? Today we got the news. You want to talk about toxic culture? Here it is. Tesla to face R-word allegations from black worker in open court. Owen Diaz alleges that his co-workers at Tesla factory in California told him to go back to Africa and called him R-word epithets. And of course, the culties must be proud because this is a reflection of their culture. Nobody's more toxic, nobody, than the Tesla culties. You know, the AMC apes, the Robin Hoodiots and the likes, we can deal with those. They're actually nice. They're just too enthusiastic. But the Tesla culties are a different breed. They're nasty, they're arrogant, and they are discriminatory and abusive. They're the worst out there. For example, we have analysts, and one of the few Tesla bears, by the way, not a lot of them out there, Gordon Johnson, and they attacked this guy viciously, and they called him all kind of R-word, discriminatory stuff over and over and over again. Is Congress, the Senate, or even the media about to question the toxic culture over at Tesla? Of course not. But you know who's questioning things, by the way, specifically when it comes to the Fed? It is Senator Elizabeth Warren, and she now doubled down on Papa Jerome Powell. She's hitting him jabs, uppercuts, left, right, and now she's flat out calling for the replacement of Jerome Powell, Mr. Dangerous. Because we now know, speaking of toxic culture, it is not only in Facebook and Tesla. That's nothing. You want to see toxic culture? Go to the Fed, because we now know that pretty much all Fed presidents traded stocks and bonds on insider information. We have Barkin, the Richmond Fed president, whose skeletons are now coming out of the closet. Likewise, we also learned that Fed Vice President Clarida also traded millions and millions of dollars in bonds and stocks while he was pumping these assets higher via the cocaine operation.
As the sitting chair of the Federal Reserve, the responsibility to safeguard the integrity of the Federal Reserve rests squarely with him. Setting the right culture at the Fed and making sure safeguards are in place to prevent self-dealing and to protect the public's confidence should be the minimum standard any Federal Reserve chair should meet. And once there is a problem, a quick and aggressive response is critical. Chair Powell has failed at both tasks. Last week, I said that I would not support Chair Powell's renomination because in one decision after another, he has consistently failed to serve as an effective financial regulator. But that is not his only failure. Chair Powell has also failed as a leader. Our nation needs leaders who are willing to set aside and enforce strong ethics standards and who act swiftly when a problem arises. Our nation does not need a go-along to get-along leader who doesn't know or doesn't care when, on his watch, people with great responsibility advance their own interests over the interests of our nation, or someone who drags his feet in dealing with problems that shake the public's confidence in the institution he leads. We need changes at the Fed.
And here are the latest betting odds. And as you can see, Papa Jerome not doing so hot so. He's dropping like a rock. And so is Brain Dead. They're dropping in the odds. And who's rising, by the way? My pick, I got $20 on him. Raphael Boystick of the Atlanta Fed. Remember this name? Remember this face, because he will be the next Fed chairman. But hold your horses here, because perhaps you want to buy the dip, not in the stock market, but on Jerome Powell. Because right after the remarks from Liz Warren, President Biden came out and said that he has full confidence of Jerome Powell, meaning the likelihood is he will renew his tenure. But what Biden doesn't understand, perhaps he's too dumb to understand it, Jerome Powell is his biggest enemy. Why? Because when this inflation disaster finally blows up the stock market and the economy, who's going to get the blame? Is it going to be Jerome Powell? Of course not. The majority of the public will blame Biden, and the Democrats will suffer a massive loss in the upcoming midterm elections. Why? Because if you go down the street with a picture of Jerome Powell, ask about 10 people, random people, who is this guy? I would say 2 out of 10 will recognize him. One of those 2 will say, yeah, that's the guy from the memes, right? But that's about it. The public doesn't even know who Jerome Powell is. The majority of the public doesn't even understand or know what the Federal Reserve is. But the majority of the public know who the president is. And they know that you place the blame on the president when the economy takes a U-turn. This is exactly what's going to happen. And Joe Biden will be blamed for the inflation crisis and the market crash and the economic disaster that will follow. Let's move on to the wall of worry. And let's see if we're making progress here. Because remember, I gave you 3 conditions for a legitimate market bottom and not just another dead cat bounce. Number 1, we need a top in the dollar. Number 2, we need a top in yields. And number 3, we need to climb the wall of worry. So let's see if we have progress here. We already talked about Jerome Powell and the future of the Fed chairman. What about tapering? Tapering is becoming more urgent and imminent, by the way. And the reason is inflation continues to rise out of control. Matter of fact, the media now is liberally using the word stagflation, which was banned before. We got hit. This channel got hit before because we used the word stagflation. And now every media outlet is using the word stagflation. Likewise, we have Fed president from St. Louis, Bullard, who came out with a hawkish stance yesterday, not just suggesting that we should taper, but perhaps we should raise interest rates sooner than the forecast the Fed gave us. Now, I don't know if Bullard is also trading stocks and bonds. He probably is. At this point, this is a toxic culture with criminals running loose. But Bullard is now adding more pressure on the Fed to start tapering and perhaps raising interest rates abruptly. And the facts don't lie here. For example, rents are increasing out of whack. We have a surge of over 20%, which is making low-income families, regular families, priced out of the market, both the housing market and the rental market now. And as I told you, by the way, I know what you guys said. Bro, wait till the evictions moratorium expires and the supply will come to the market and rents will go down and there you go, inflation will cool. It is transitory. I told you this is not going to happen. What's going to happen after the eviction moratorium expires, landlords will kick tenants out and they will rent the units for the market price, which is 20, 30, in certain cases 50% higher. And therefore, if anything, the evictions moratorium, the expiration of the evictions moratorium will actually be bullish for rent prices to go higher. And this is exactly what we're seeing right now. And we know that shelter cost is a large component of the CPI and other inflation measures. So if rent prices continue to rise higher, you bet that inflation data will come out hotter and hotter and hotter. We also have a massive trade deficit now. This country exports nothing, and we're importing everything. We're reliant on imports. We have the holiday season, the hottest shopping season. Where are the goods? The goods are stuck at the ports, the factories. They're not being shipped. We have a labor shortage. We have truckers shortage. We have closure of ports. That will lead to prices rising higher and higher and higher. And of course, the epicenter of the inflation crisis right now is becoming natural gas. We are seeing a massive short squeeze here, and natural gas prices are surging like you have never seen before. 10% gains on the New York market today, and 20% gains in a single day over in London. And with natural gas prices rising higher, with crude oil prices rising higher, with heating oil prices surging higher, this is about to be one expensive winter for the consumer. Who do you think they will blame for the massive bill they're about to receive? The answer is the president. They're not going to blame Jerome Powell. And therefore, I say that the biggest risk for this administration right now is the tenure of the reckless Fed Chairman Jerome Powell. Inflation is surging higher across the globe. We talked about the Russian, the Czech Republic banks raising rates, and now we have the South African Central Bank hiking up rates. The problem is that the inflation crisis will continue to hit this country hard, meaning South Africa, so long as the Fed continues to print money out of thin air, refusing to taper, and here's for you, pay attention now, to raise interest rates. Here's what's going to happen. The Fed will taper, and you will see right away that the moment the Fed tapers, the stock market crashes. But inflation is not going to go away. Inflation will be sticky, and the Fed will come to a conclusion that tapering alone is not enough, and they have to start jacking up rates higher. Abruptly, of course. Do you think the market and the economy will like higher rates? Think again. And perhaps the most important information that we got in the morning is from the ISM Manufacturing and Services PMIs. When it comes to manufacturing, respondents are saying, and you can pause this and read it for yourself, by the way, it is a consistent theme. The prices of electronics, the prices of semiconductors, the supply chain issues, the labor shortage, energy prices out of whack, the fact that goods are stuck in ports, the logistics nightmare, the shortage in truckers, etc., etc., etc. When we look at the numbers for manufacturing, the activities are now picking up higher again, meaning we're moving from this stagflationary period, which was due to the rise in the D cases went higher, and therefore the D put a lot of pressure on growth in the economy. But it put minimal pressure on prices. This is the problem. So now that the D is cooling down for now at least, what is going on? Prices are recovering and so is growth. The problem is the impact of the D was more severe on growth, not on prices. So when both of them start to climb higher again, there is a gap between growth and prices. So this stagflationary period will extend, and perhaps it will morph into something bigger, a larger stagflationary crisis, due to the gap between growth and prices. For example, when we look at the manufacturing PMI, production is growing higher, new orders growing, employment also growing, inventories growing. But when it comes to customer inventories, they're actually down. They are too low. What does that mean? It means these producers will have to ramp up production in the next few months. The problem is, to ramp up production, you need supplies, you need labor, you need materials. All of these are not available now. We have shortages all over the place. What does that mean? Producers are going to have to jack up prices even higher. The survey for September, to begin with, already indicating that prices are rising higher at a faster pace. So prices will continue to rise higher and higher and higher. When we look at commodities up in price, we have products like aluminum, copper, logistics, energy prices, and therefore I continue to say, in this market, the safest place to be is the bullet stocks, meaning aluminum, copper. Nothing will go through without these kind of stocks. Even energy stocks are becoming bullet stocks now. It doesn't matter for these producers. They command massive pricing power. You have no choice but to buy aluminum if you want to ramp up production. What does that mean? Aluminum prices will continue to rise higher, and this will be good for aluminum stocks. When it comes to commodities down in price, we can celebrate, we can pop the champagne, right? We have lumber down and steel, scrap wood. You see, we told you it's going to be transitory. The problem is we have commodities short in supply, including aluminum, including steel, including electrical components and semiconductors, all in shortages right now. What about the picture for the services sector of the economy? It is a similar theme here. We have shortages in semiconductors. We have problems with logistics and supply chains, transportation bottlenecks. The demand is higher than the supply, and we have mass shortages across the services sector of the economy. And as you can see here, when we talk about production, when we talk about new orders, when we talk about the backlogs, all rising higher, but inventories are down, and prices continue to rise higher and higher and higher. Again, they're going to have to ramp up here and catch up with the demand. That requires more labor, that requires more spending, more supplies, which means, absent of having that, if we still have scarcity in labor and supplies, the other option is jacking up prices higher. So prices will continue to go higher and higher and higher, and the inflation crisis will become worse and worse and worse. When it comes to commodities up in price, according to the services sector of the economy, we have food and beverage, we have beef, bacon, chicken, copper, aluminum. All of these are in short supply. But rest assured, we're making progress here. Inflation is transitory. Trust us. Look at lumber. Look at rental cars. Yay, they're down. The problem is the commodities in short supply. We have medical kits, short in supply. We have electronics, laptops, computers, heating devices, all short in supply. What does that mean? Either the supply will ramp up faster. We're going to have ports reopening, the labor shortage magically being resolved. Otherwise, prices will continue to go higher and higher and higher. And now we have warnings even from the good professor, Professor Siegel, over at the Wharton School of Business, who's known to be a Wall Street propagandist, but even the good professor is now saying that inflation is getting out of whack, and it will be a problem for the economy and the market, by the way. Next, what about China? Perhaps we're doing some progress here with China. The answer is not so hot so. We have bad news. For example, we have the new China policy, which, by the way, doesn't remove the tariffs. This is about to grow and become a new concern for the market. The potential for the revival of the trade war between the United States and China, because China did not live to their promises and expectations from the trade deal. They're not importing goods from the US, and of course they will use the COVID-19 crisis as an excuse to say, hey, we had an emergency, we could not keep up with the trade deal, yada yada yada. But China has bigger problems here because their economy is falling apart. And if their economy falls apart, then they're not going to import goods from us anyways. We have a massive trade deficit climbing to a record $73.3 billion. Why? Because the demand U.S. consumers continue to surge higher and higher and higher, but the supplies are nowhere to be found. The contrast between the American and the Chinese consumer is extremely important. On one hand, the American consumer is enjoying the free cash from the cocaine operation, stimmies all over the place. Therefore, the demand is climbing higher. The Chinese consumer is suffering stock market losses and perhaps more austerity measures. At some point, the U.S. consumer will be dragged down by the weakness in the Chinese economy and the Chinese consumer. Never mind the energy crisis over in China. Yes, they're scoring sweetheart deals with Middle Eastern countries, but the problem is the rise in commodity prices is killing China. They tried over and over and over again to manipulate the market, the commodities market, but the power of this inflation is overwhelming China. So long as the Fed continues to print money out of thin air, and interest rates continue to be accommodative, money has to find somewhere to hide. Stock market valuations are sky high. The bond market is in a massive bubble. Where else are you going to go? The answer is commodities. And of course, what about the risk regarding Taiwan? China continues to fly planes, more planes, over Taiwanese airspace. This happened over the weekend, and it happened on Monday, and who knows what's going on here? Is China casing Taiwan for perhaps an upcoming invasion? That's another disaster scenario that the market has to price in. What about the Evergrande crisis? We know that Evergrande is now missing payments, and we have other Chinese real estate developers also missing payments. So this is a contagious disaster across the entirety of the real estate sector in China. Luxury real estate developer Fantasia failed to make $206 million bond payment on Monday. And now we have talks that perhaps pieces of Evergrande will be taken over by other companies, and shares of Evergrande were halted on Monday. To my knowledge, they're still halted, so perhaps there is a deal upcoming here. We don't know the details or how the market will react to such a deal. What we know for sure is the Evergrande crisis is getting worse and it is becoming more contagious. They continue to say this is not Lehman, but how do you know? How do you know what's hiding in the details? We're not going to know until the shoe drops. Remember what I said. I said that the Fed and central banks across the world know that we have a massive stash of risk here. And if this stash light up on fire, we will have the biggest economic crash and the biggest market crash in history. And therefore, the Fed and their allies are using the repo facilities, the vacuum machine, to reduce the stash of risk. On top of that, they will conduct controlled fires by tapering here and there to reduce the amount of stash. That is the risk. The problem is, what if there is an accelerator hiding in this massive stash of risk? And when the Fed starts a controlled fire by tapering, this accelerator will light up on fire and the whole stash will burn. What is the accelerator? Perhaps it is hiding in the Evergrande crisis. And when the you-know-what hits the fan, then we will know who's going to hold the bag. And it will be surprising to all. We talked about all the bad news coming out of China. But what about the good news? Yes, I got them for you. Yes, we got good news from China, finally. A video shows female Evergrande staff dancing to entertain clients at one of the company's property showrooms. So the bad news is, you lost $3 million. But hey, the show was worth it, right? Look at these ladies dancing. It was a good show. Come on. Stop it with the FUD already. Next, what about the debt crisis? What's going on here? Here's what's going on. In the morning, we got Senator Joe Manchin coming out and saying, you know what? I'm folding. I will go to 1.9 trillion. I told you, this guy's going to fold. Perhaps the Democrats haven't learned how to deal with Manchin, even though he's been in politics since before you and I were born, which is... he plays tough, he barks and yells, and then at the 11th hour, you approach Senator Manchin with a checkbook and you say, how much? Senator Manchin, how much? Give me a number. He'll give you the number, you write the check, it's over. He'll agree on whatever you want him to do. But the problem doesn't stop here with Manchin and Bernie and all of these people. Because at the end of the day, you need the approval from the GOP, meaning Mitch McConnell. And Mitch McConnell in the morning lived up to his name and he started stroking Biden's ego, saying good things about Biden, how they worked together in the past, and he's my friend. The problem is Biden responded by shitting on McConnell and calling him and his party dangerous. So much for ass-kissing McConnell. Didn't work out. And by the way, back to the wall of worry, what about the Biden administration? Nothing new here, perhaps the potential of a revival of the trade war between the US and China. But when you ask respondents in surveys, what do you think about the direction of the country under Joe Biden? Even Democrats are now dropping like a rock, and they're saying not the right direction. Why? Because inflation continues to rise out of control. Whether Democrat or Republican, you're paying more for gas, you're paying more for meat, you're paying more for rent, you're paying more for diapers, and pretty soon you're going to pay more for underwear because cotton prices are exploding higher. What about the V, the D, this E, whatever it is? The thing. When it comes to the thing, we have progress. We have the pill for Merck. We have new testing kits at home, easy testing kits, cheap, affordable. And we're getting closer and closer and closer to the end of the tunnel, to the light at the end of the tunnel here. Is this good news or bad news? Certainly good news, but what does that mean for the stock market? It's bad news. Why? Because good news when it comes to the thing is bad news for the stock market because it reduces the need for the coke from the Fed. Less coke means the market goes down. End of story. And what about the risk from margin calls and the black swan?
That comes later.
Anyhow, folks, this might have been a long slew of information, but we haven't even started. And we're running out of time. So let's move on to the market's performance today. And here we go. The Dow Industrial Average closing in the green by 311.75 points, or a gain of 0.92%. The Nasdaq closing in the green by 178.35 points, or a gain of 1.25%. The S&P 500 closing in the green by 45.26 points, or a gain of 1.05%. Moving on to the sector's performance, leading the pack at number 1 and capturing the gold medal, financials at number 2, the silver, technology, number 3 for the bronze, communication services, and the laggard of the day is REITs down. Now, the rally in financials is validated due to the rise of the 10-year yield. On the other hand, the rally in tech and communication services is probably a phony rally, and the reason is yields are popping higher. We're not going to have a legitimate market bottom until and unless the dollar and yields top. Absent of that, the only valid rally in the market is from financials. Financials go higher when interest rates rise higher. And what about the advance to decline ratios? Yesterday, we did not have a show, but the advance to decline ratios were suppressed. 20% advancing on the Nasdaq. When you see these kind of numbers, understand we're going to have a tradable bottom. Likewise, when we have exaggerated numbers to the upside, 80, 90% advancing, we have a tradable top. And with that understanding, now you know why the market rallied today. An oversold bounce, and now we have the advance to decline ratios back to normal. The NYSE, 62% advancing versus 36% declining. The Nasdaq, 57% advancing versus 39% declining. What about futures? What's going on here? A massive rally across the board, but the notable action is in crude oil and energy prices. Crude oil popping higher by more than 2% apiece for both the WTI and Brent. Brent is now trading above $80 a barrel, and soon enough we're going to have the WTI also trading above 80. Heating oil prices continue to surge higher, along with natural gas prices a massive rally. And this is classic stagflation, by the way. The Bloomberg Commodity Index reached all-time highs. What does that mean? We are reaching the later stages of inflation. In the beginning, it is good for the economy, real estate, and stocks. But as inflation progresses, we get into the stagflation cycle, and the only place to hide here is the commodities market, and therefore we're seeing commodities rising higher. When it comes to softs, we have a massive rally here, a massive short squeeze in cotton, rising higher, almost 4% today alone. Cotton prices are up over 20% in about 2 weeks. Likewise, we have a rally in lumber, the transitory one, along with sugar and cocoa. The decliners of the day, OJ and coffee, down big. Perhaps you can drink OJ and coffee now. What about metals? Muted with a downward bias. It doesn't appear that the rally in the dollar is over. The dollar perhaps taking a break before popping higher again. And until the dollar tops, we're not going to see a reliable bottom in metals. Gold down, silver down, platinum down, copper down. The only gains in metals futures are coming out of palladium, rising higher by a little over 1% today. What about meats? Muted activities for live cattle. On the other hand, feeder cattle futures are rising higher by about 1%, while the new big tech, lean hogs, taking a pause for now, a break. It exceeded my expectations, the rally in lean hogs over 20% in a short amount of time since I entered the December contract. And here is an update to the chart, and as you can see, lean hogs prices shot up higher, and I achieved my target from the trade. What about grains? I have another trade for soybean oil, and soybean oil is surging higher today, over 4% gains. And here's the chart for soybean oil. We have a bull flag, a triangle consolidation, whatever you want to call it, doesn't matter to me, but we are breaking up higher. That means we will see soybean oil prices rising higher and higher and higher. We also have a rally in canola and soybeans, while we have declines for wheat, oats, corn, soybean meal, and rough rice futures. Moving on to the big casino, the options market. What's going on here? At number one, the hottest table is Tesla, the souffle, with about 1 million contracts. Only 39% of those are calls. The bears are starting to close in here. They're buying puts. The implied volatility is surging higher in Tesla. And the likelihood is we have a massive move coming, one way or the other. Whether you're holding calls or puts, if the implied volatility continues to surge, these puts or calls will appreciate in value if the chart moves your way, because the implied volatility moved from 4%, meaning the IV percentage, the percentage of days where the implied volatility is lower than the current implied volatility. We moved higher from 4% now to all the way 30%. Meaning that these options premiums are appreciating in value. And they continue to appreciate in value because we're seeing the demand for Tesla options increasing by the day. There is a massive move coming here. We don't know which way it is. My bet is to the downside. What about Apple at number two? With about 930,000 contracts, about 63% of those were calls. And here it is at number three, Facebook, with about 420,000 contracts, about 57% of those were calls. And yesterday, by the end of the day, they were buying out of the money calls, the weekly expiration for Facebook, betting for a rebound. They got the rebound today. Now they're closing the calls and they're buying puts once again, betting for another leg down in Facebook. Moving on to the unusual activities that took place in the options market today. Starting with the ticker ASHR, this is a Chinese ETF. They're betting for more declines to come here by buying the 35 puts, the expiration date October 29th, with expectations that the name will drop down by more than 6% or so by then, and they paid about 55 cents apiece to enter this trade. All in all, spending about $3 million. What about the trade for the ticker QQQ, the NASDAQ? They're betting for more declines to come here by buying the 326 puts, the expiration date December 17th, with expectations that the Qs will go down by more than 9% by then. They paid about $6 a piece to enter this trade. All in all, spending about $11.5 million. This is a big one. What about the trade for the ticker WPM, Wheaton Precious Metals, a stock that I own in my portfolio, by the way. And since I bought the name, it went higher by more than 30%, and then it went back to earth where we started. Of course, the tell for the top was the technicals. I'm highlighting the candlestick pattern. This is your homework, by the way. Let me know in the comments, what is this pattern called? Because it was confirmed right away with another massive downward candle. So let me know in the comments, what is this pattern called? Now, on the daily chart for Wheaton, the RSI indicator shows extreme oversold conditions, meaning the stock is looking for a bounce, and therefore I followed this trade. I bought calls and I added to my position. I bought the dip in the name. And pay attention here. Perhaps we're seeing the revival of gold. Perhaps gold will make a comeback, because historically speaking, gold has an inverse relationship with yields rising higher, meaning if yields go higher, gold goes down. However, in the great inflation crisis in the 1970s, yields and gold rose higher together, and gold was one of the best trade, and hence the reputation of an inflation hedge. But the truth is, gold has ceased to be an inflation hedge since the 1980s. But are we about to see a comeback of gold? I have a theory here, and I will discuss it with you in the charts analysis. But for now, back to the trade for WPM, Wheaton Precious Metals. The buying calls, the $40 calls for December 17th. With expectations that the name will pop higher by more than 7% or so. They paid about $1.32 a piece to enter this trade. All in all, spending about $2 million. What about the trade for the ticker TSLA, Tesla? They're buying calls here, the whale. Remember the whale? Well, he or she bought the 800 calls yesterday. Now they're rolling up and they're buying the 830 calls. For the expiration date, October 22nd, with expectations that the name will pop higher by more than 6% or so by then. They paid about $10 a piece to enter this trade. All in all, spending about $12 million. What about the trade for the ticker FB, Facebook? They're buying puts now, the 310 puts, the expiration date, Friday, October 8th, with expectations that Facebook will drop down another 7% or more by then. They paid about $40 a piece to enter this trade. All in all, spending about $300,000. What about the trade for the ticker GLD? This is for gold. Pay attention now. They're buying the 181 calls for the expiration date, November 19th, with the expectations that the GLD will pop higher by more than 10% by then. They paid about 25 cents a piece to enter this trade. All in all, spending about $200,000. What about the trade for the ticker AMC? They're buying the 39 calls here for the expiration date, you guessed it, this upcoming Friday, October 8th, with the expectations that AMC will pop higher by more than 5% by then. They paid about 65 cents a piece to enter this trade. All in all, spending about $500,000. And lastly, what about the trade for the ticker QS, QuantumScape? They bought the 25 calls for the expiration date, October 29th, with the expectations that the name will pop higher by more than 10.5% by then. They paid about $1 a piece to enter this trade. All in all, spending about $650,000. Moving on to the heat map analysis. What's going on here? Any theme at all? Not really. It's a rebound day. Oversold conditions. Popping higher across the board. It is an offensive day, and therefore, REITs, utilities, the defensives are not working. But pretty much everything is popping higher here. Rebound. And therefore, this is how you know that this is a fake rally. It's not going to last because we don't have a theme. We don't have a validation at all. The only validation we have is for financials to rise higher. But does it make sense at all? For technology, for example, while yields are popping higher? Of course not. The only interesting theme here is the contrast between Merck and Moderna. When Merck pops higher, Moderna goes down. When Moderna goes higher, Merck goes down. Or shall we say Merck goes down, Moderna goes higher. Merck is in control now. If we have more good news coming out of Merck, then Merck will continue to rise higher. Meanwhile, Moderna, the money will come out of Moderna, Pfizer, BioNTech, and it will chase Merck. Moving on to the charts analysis, starting with the SPY 30-minute chart. What's going on here? We have another algorithmic bounce based on oversold conditions. In the market, the computers know exactly what they're doing. They popped higher, reclaiming 430 and 434 for support. But by the end of the day, we have the human beings showing up, booking profits, selling the rip. Why? Because the sentiment is changing from the bears panicking and booking profits right away to the bulls panicking and booking profits right away. Thanks to the algos, we made enough, rebounded higher, give me the cash, and we'll take it from there. But perhaps the bulls are looking for a higher low and then a series of higher highs and higher lows, all the way till closing the gap, which happens to be at around 443. If that happens, the market becomes bullish. But this is going to be a difficult journey. It's not going to happen easily. And the reason is we don't have conditions for the bottom yet. We don't have the dollar topping, we don't have yields topping, and we don't have the wall of worry being taken care of. If anything, We're perhaps going to get a surprise from China anytime now, and it's not going to be pleasant at all. The support for now is 430, the resistance at 434. What about the daily chart for the continuous contract on the SPY? This is neutral today. It is a process of finding a bottom, going back and forth, asking market participants, do we have any dip buyers here? And if dip buyers don't show up, the market goes down, perhaps a better price, until it finds a price where dip buyers are willing to buy. The problem is that the candle's closure today was below yesterday's highs. The good news is the close was above yesterday's low, and therefore we have a neutral candle today, but the momentum indicators are getting better. The RSI, the MACD is oversold, and it is curling its way back up. If the market continues to rise higher, we will see how it reacts around 4,384.5. If we have a rejection, then we have a confirmation that the market is not ready to go higher. The market is not ready to recover. But the longer we linger here, going back and forth with no buyers, where the dip buyers don't show up, the more likely the market will flush down. We have another leg coming to the downside. So the bulls better do the work right now, fast, as soon as possible, pushing the market higher to close above 4,384.5 by the end of the week. Moving on to the Qs. What's going on here? The algos popping higher, oversold conditions, as you can see from the RSI indicator, even though we had a bear flag formation. But you always have to combine the candlestick formation with the momentum indicators. Otherwise, you're going to get it wrong. The algos pop higher. They close the gap, and then the human being, by the end of the day, starts to sell. The support remains 352. Meanwhile, the resistance at 360.5. Remember, it is the battle of the gaps. We have a gap higher, all the way around 369. This is the aim and the target for the bulls. It's going to be a long journey. The aim for the bears is the gap left below, the gap higher that we got in the morning. Which one is easier to close, by the way? The answer is the closest gap, favoring the bears. But it is not all bad news for the bulls here. Because even if the market goes down, the Nasdaq in this case, it could rebound, find a footing, and rebound higher. And if it does, then perhaps we will see a reverse head and shoulder formation, indicating that we have a solid bottom. Watch for a higher high. What about the daily chart for the continuous contract? Again, neutral candle closing below the highs of yesterday, yet managing to close above the lows, and therefore neutral activities today. The momentum indicators are oversold, the RSI, the MACD. So again, can the rebound continue? Of course it can, because we have oversold conditions. The real test will be 15,000. If the Nasdaq fails to close above 15,000, then 14,000 becomes more likely. I don't see how the Nasdaq moves higher, closing above 15,000. We have yields continue to pop higher and higher and higher. But here's something to keep in mind, by the way. This is a chart for the NDX, the big Nasdaq. We have a trend that goes back all the way to last year. And every time we have a divergence, an extended one. In the trend line, we have a correction. And these corrections range from 8 to 15%. So far, we went back to the line, and this was a correction of about 8 to 9% top to bottom, and the market rebounded higher. This is critical, folks. If the market continues to rebound higher from this point on, then we have a bottom. We have a trend, a healthy one, a bullish trend. It went back to the trend line. Now it is bouncing higher, and we continue back on the trend. The problem arises if the trend is broken, specifically from a weekly candle perspective. If that happens, then this is more than just a garden variety correction. This is perhaps the top, the beginning of the crash. What about the IWM 30-minute chart? Still failing to crack above 223, even though the IWM, the Russell 2000, also gapped higher in the morning. We now have consolidation with lower highs and higher lows. You're not going to conduct any trade here before you know the resolution. Will the chart break the pattern higher or lower? And then you have a trade. What about the Dixie, the dollar index? What's going on here? Again, keeping the support, 39.7 still intact. And the likelihood here is the momentum is so strong that this is an ABC pattern, meaning perhaps we have higher highs to come in the US dollar and will take it all the way perhaps to 95. If it happens, it will not be welcome news for the inflationary side of the stock market. We're talking about industrials, energy, and materials. And here's the chart of gold. What's going on here? Still holding at the Fibonacci support, but again, if the dollar continues to rise higher, gold will flush down. But here's something to think about. This is the chart of gold and the chart of the TBT for the 10-year Treasury yield. Gold in red, TBT in orange. We have an inverse correlation here. But recently, as yields started to move higher, gold is moving higher slightly. No conviction here. So the question is gold about to perform as we know it, an inflationary hedge, or are we seeing distortions in the market? For example, oil and the dollar rallying hand in hand, which shouldn't happen, by the way, and now we have yields and gold rallying together. For whatever reason, market distortions and divergences, which will be resolved in a violent manner. Here's a chart for the 10-year Treasury yield. Again, popping higher, a massive rally today, and perhaps we're seeing an ABC pattern, which will take us all the way to 1.7 minimum. If that happens, the big cap technology stocks, the NASDAQ, will not hold. Therefore, we do not have a confirmation for a bottom, we don't have a confirmation for a rebound, we don't have a confirmation for the rally in tech. The only validation we have is the rally in financials as yields continue to rise higher. What about the TLT weekly chart? We now have a confirmation. We have a crossing in the MACD indicator from a weekly perspective. We have negative divergence on the RSI. And the likelihood is if the ABC pattern happens in yields and they pop all the way to 1.7%, then the TLT will drop down to a minimum 134.5. What about the VIX 4 hours chart? Looking at the MACD, this has been a consistent and reliable indicator going all the way back to at least June. Are we seeing this indicator tapping out? It's over. It's no longer reliable because the VIX has not made up its mind yet. It continues to zigzag in consolidation back and forth, and the MACD indicator continues to slip from positive to negative. So for now, I'll be watching for a decisive break one way or the other in the MACD and a pop either below 20 or above 25. Above 25, this is obvious, the SPY will go down. We have another leg down in the market. If the VIX, watching the chart overnight, drops below 20, then we know the SPY rebound, the rebound in the market, doesn't matter what it is, the SPY, the Qs, the IWM, doesn't matter. It will continue, at least for now. Here's a chart for Apple. We had a good looking candle on Friday, but I suggested that perhaps this is a bull trap, and indeed it is, because Apple went down. It is oversold for now, so the rebound could continue, but again, the momentum is so strong to the downside, and my target is all the way to the downward end of the channel, which will be about 15% top to bottom correction. If it happens, then I will be buying Apple with both hands, because then we will have a legitimate bottom. Of course, I will confirm with the dollar and yields before I buy. But what about Tesla, the souffle? 30 minutes chart, what's going on here? Popping higher in the morning, but the rally faded right away, and the stock closed right at the resistance, around 780, 781. We have a descending trend, the sloping trend of resistance. For now, it appears as if Tesla's failing, but absent of making lower lows, we don't have a confirmation of the failure. But as I showed you in the options market, the puts are at waiting calls, so the options market is betting for an upcoming downside in Tesla. On top of the bad news we got regarding the racial problems at the souffle, very disturbing by the way, we also have JP Morgan. And JP Morgan is saying that the valuation is still out of whack, even after the impressive deliveries number. Let me know in the comments what do you think about JP Morgan calling Tesla out of whack when it comes to valuations. What about tulips, BTC? What's going on here? We have a check mark on the retest of 42,000. We have a check mark on the closing above 47,359. And we now have a check mark when it comes to the weekly chart, the MACD indicator. So the tulip maniacs, you have my blessings and my permission to rally higher here. The bad news is I'm not going to join you in this one, but I will be the responsible parent watching from outside as you have fun at the playground. But if there are any problems, say an injury or bullying, I will do what a responsible parent would do. I will hail a cab and bail out. Good luck. By the way, speaking of JP Morgan, we have Jamie Dimon, the bankster Jamie Dimon, and he says that tulips are fool's gold. BTC is fool's gold. He says a little bit of a fool's gold. Let me know in the comments, by the way, what do you think of Jamie Dimon calling Bitcoin fool's gold. What do you think about Jamie in general? Let me know. And lastly, here it is, AMC. 30 minutes chart, we had the bear flag breaking to the downside and now consolidating. What will the next move be? While we have a bear flag on the 30, which already played out, when we zoom out, we have a bull flag on the daily, suggesting that perhaps if the gamma squeeze happens, the mini gamma squeeze, we will see AMC popping higher to 40. The ultimate test is, can it close above 42.5 or not? Because the weekly chart remains concerning. Number one, we have lower highs and perhaps lower lows. Number two, we have a failure to cross on the MACD indicator. But the good news for the apes, we are still in a triangle consolidation. We have lower highs, but we have higher highs for now, and you should not make any conclusion whatsoever, bearish or bullish, until the chart breaks this consolidation range one way or the other. Is the triangle about to be broken to the upside or the downside? Then you have a trade. My bet is the chart will break to the downside. Moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have Atlanta Fed Boystick speaking, and this will be extremely important. We know that Jerome Powell's future is in jeopardy, and brain dead not looking so good for now. So perhaps Boystick is the guy to go to. All eyes on Boystick for now. What is he going to say? Is he more responsible than Powell? What is he going to say about social issues, climate change, etc., etc.? The more buzzwords Boystick throws, the more Biden will like him. The more likely that we're going to have Boystick as the new Fed chairman. We also have the ADP report, and this will be extremely important, by the way, because the expectations are for 425,000 jobs created. If the number comes out hotter, and the market's not going to like that. Why? Because good news, good economic news, means bad news for the stock market. Why? Good news prompt less coke. This is a cocaine-fueled market. It doesn't care about the fundamentals at all. If we have a hot number in the ADP, then the assumption is we will have a hot number on the BLS payroll report coming out on Friday. If that is the case, then Powell will taper 1,000,000% on November. You think the market is going to like tapering? I don't think so. And with that, ladies and gentlemen, we're done here. Thank you for listening. Thank you for watching. This is all I got for you for now, but I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.